On February 28, 2014, Mt. Gox, the largest Bitcoin exchange, crumbled under the weight of a staggering $60 billion disappearing act. This catastrophic event sent shockwaves through the nascent cryptocurrency world. But how did such a colossal failure happen? Let's dive into the rise and fall of Mt. Gox, a tale of ambition, negligence, and the relentless pursuit of fortune. Mt. Gox's journey began in 2006, not as a Bitcoin exchange, but as a trading platform for Magic the Gathering cards. It was the brainchild of Jed McCaleb, a programmer with a knack for innovation. The site's name, Mt. Gox, was an acronym for Magic the Gathering Online Exchange. However, as Bitcoin emerged on the scene, McCaleb saw an opportunity. In 2010, he transformed the platform into a Bitcoin exchange, capturing the attention of early adopters of the digital currency. Within a year, Mt. Gox handled up to 80% of all Bitcoin trades globally. It was a pivotal moment for cryptocurrencies, as Mt. Gox became synonymous with Bitcoin itself. Yet beneath the surface, trouble was brewing. In March 2011, just months after the exchange began its Bitcoin operations, it was sold to a French software engineer named Karpelès. Under Karpelès, Mt. Gox continued to grow at an unprecedented rate. By 2013, Bitcoin was gaining mainstream attention, and Mt. Gox was handling transactions worth millions of dollars daily. But with great power comes great responsibility, and Karpelès struggled to manage the rapid expansion. The infrastructure of Mt. Gox was crumbling under its own weight, with frequent technical issues and growing security concerns. In February 2014, Mt. Gox suspended trading, citing the loss of 850,000 bitcoins, a sum representing 20% of all bitcoins in circulation at the time. The announcement was met with disbelief and panic as investors watched their digital fortunes vanish. The exchange's CEO, Karpelès, claimed the loss was due to a hack, but doubts lingered about the veracity of his statements. The Bitcoin community was in turmoil, grappling with the realization that the unthinkable had happened. The downfall of Mt. Gox was a testament to the perils of inadequate security and poor management. Karpelès, who had acquired the exchange from Jed McCaleb, was criticized for his lack of transparency and failure to implement robust security protocols. The rapid growth of Bitcoin trading had outpaced the regulatory frameworks needed to safeguard investors, leaving Mt. Gox vulnerable to exploitation. The cracks in the foundation were evident, yet they went largely ignored until it was too late. As investigations unfolded, it became clear that the situation was more complex than initially thought. While Karpelès claimed that 650,000 bitcoins were stolen, 200,000 were later found in a cold wallet, raising questions about the true extent of the losses. Investigators and regulators struggled to track the stolen bitcoins, which had been laundered through various exchanges, highlighting the complexities of cryptocurrency crime. The investigation revealed a tangled web of deceit and incompetence, casting a long shadow over the digital currency landscape. The human cost of the Mt. Gox collapse was immense. Thousands of investors lost their life savings, with many reporting emotional distress and financial ruin. Stories of despair emerged, with some individuals driven to the brink of desperation. The financial impact extended beyond individual investors, causing billions in losses across the cryptocurrency market. The event catalyzed a wave of lawsuits and claims against Karpelès and the exchange, leading to a protracted recovery process for affected users. Many spent years in legal battles, hoping to recoup a fraction of their lost investments. In 2015, Karpelès was arrested on charges of embezzlement and data manipulation. The arrest was a dramatic turn of events, capturing headlines worldwide. He was eventually convicted of falsifying financial records, but acquitted of embezzlement charges. The legal proceedings shed light on the chaotic operations of Mt. Gox and the challenges of regulating a rapidly evolving industry. Karpelès, once a figure of ambition and innovation, became a symbol of the dangers lurking in the uncharted waters of digital finance. The aftermath of the Mt. Gox disaster saw significant changes in the cryptocurrency landscape. Confidence in digital currencies was severely shaken, leading to a sharp decline in Bitcoin prices. The incident underscored the need for stricter regulations and better security measures to protect investors and maintain the integrity of the cryptocurrency market. Exchanges around the world began implementing more rigorous security protocols, a direct response to the vulnerabilities exposed by the Mt. Gox fiasco. The saga of Mt. Gox serves as a cautionary tale for the cryptocurrency community. It illustrates the potential risks associated with digital currencies and the importance of regulatory measures to protect investors. The lessons learned from this disaster continue to resonate within the crypto world, shaping the future of digital asset trading. As the industry evolves, the memory of Mt. Gox remains a stark reminder of the fragility of trust in the digital age. The collapse of Mt. Gox was not just the fall of an exchange, it was a watershed moment that forever altered the trajectory of cryptocurrencies and the way the world views digital assets.